My name is Cody Kraus, and I'm a real estate broker owner that's obsessed with everything real estate. Investing, building, selling, developing, farming, you name it. I've been doing this since I was 18 years old, and I've learned a ton through trial and error, and I've met some of the coolest people ever. This is a show where I invite these people on to talk about their experiences and mine, plus everything else real estate. Let's go. All right, well, everybody, thanks for tuning in to the show today. Today I have with me Ian Murray, and for anybody who doesn't know Ian, who is Ian?
It's a great question. So obviously my name's Ian Murray. Born and raised in a little town called Wallaceburg. So not actually originally from Kingsville.
Yep.
Made a move to London for a number of years, and that's actually where I met my wife.
Okay.
And
went through schooling in London.
Ended up picking up a job in London for a period of time, and then out to St. Thomas, and then did a little stint up in Toronto for an internship. And then I convinced my wife, the big city girl, to move down to Kingsville.
So was she from Toronto then?
She's from London. Yeah.
Oh, okay.
So you got to remember, I'm from Wallaceburg. So like big cities, like anything that's like Chatham, I think can be considered a big city to me. You know,
Up against Wallaceburg. Yeah. Your measuring stick is relative.
So convinced her to make the move down with me to Kingsville to take over an insurance agency that was in town. Yeah. Kind of fast forward through, a lot of different business stuff that's kind of gone on there. And we have triplets. So we're 8-year-old triplets.
Okay.
So we've got a bit of a busy household.
We were just talking about that too. And so like, to me, it blows my mind. We have 4 kids, but hand-me-downs are a thing.
Yeah.
You have to buy 3 bikes,
Yeah.
3 sleds. It's not, okay, well, I'll buy this bike and then it'll get handed down to the other 2. No, we buy 3 of everything all at once and either throw out or sell.
Right.
All 3 of everything.
You don't buy anything good because there's no one to pass it down to.
Yeah.
You're trying to buy the secondhand stuff as much as possible.
It's definitely not the most economical way to have kids.
It's not the most economical. I think honestly the hardest part about that is my poor wife. So she was working pharmaceutical sales at that point in time.
Yeah.
We now own the insurance business together, and she's really the one who really runs that agency. She's what we call the integrator for the company.
Yep.
But when she was working at the pharmaceutical company and we had the triplets, you got 3 kids and you only get 1 mat leave.
Yeah. You think it should be 3x.
Yeah, because at the end of the day,
8 months off, we should be getting 24 probably.
Yeah, like at least give us 2 years. But we'd made a call to the government and they said, no, that's just one. It's one time through. We're going, wouldn't it be nice to just be able to spend,
pay into this system
3
for long
years?
enough.
Yeah, exactly. Just to hang out with my kids. So, but yeah, so that's kind of bringing us up to date is we own an insurance agency together. We got these 3 kids. They're all into hockey and they're going
expensive.
they're going to the new super school. And my wife, not only running the insurance agency, but she actually started up a not-for-profit charity called Counter In.
Right.
Which has been unbelievable, just trying to get more young girls into sports.
Yep.
Cody, I went from Wallaceburg to London, St. Thomas, and, Kingsville. I was always able to just pick up with like a pickup hockey team, right? There's no pickup female hockey teams because girls just don't stay in sports long enough, right?
Yep.
And when we
maybe in a big city, there's more, but still concentrated, and then maybe tighter knit, harder to get into.
Yeah,
but not as readily available.
And then you look at the leaders in positions, and I mean, you're a business owner yourself. You talk to a lot of other business owners. Did you play sports growing up?
Yep.
And most business owners did.
Yeah, it's where you learn a lot of leadership qualities.
So that's her primary focus with Counter In. It's about getting and keeping young girls in sports so they actually get to leadership positions. They learn teamwork. They learn those essential skills because there's no other place that you can learn it better than in a sports team.
No, I think it's the easiest way you can introduce like working together, whether it's doubles if you're playing tennis or 5 people if you're playing hockey, or I think it's 11 on a soccer field. Like that dynamic of having a common goal and working together to achieve it. It's in sports, it's competitive, it's fun and all that kind of stuff, but you can take a lot of that and pull it into insurance, real estate, whatever. I haven't thought of it that way, but it makes a ton of sense.
Any career path that you want to be on. I mean, when your best teammates that you have probably played a team sport at some point in time.
Yep.
And then for myself, on the other side of things, I own a EOS franchise. So we implemented EOS into our business. it completely,
Entrepreneur operating system.
yeah, the entrepreneurial operating system. So it completely restructured how we run our business. I gained a lot more clarity for our team members. Got everybody on the same page, working towards the exact same goal. I fell in love with the system.
Yep.
And just everything about it. And I decided to buy the franchise. And that's where I spend a lot of my time now, is actually just helping other entrepreneurs get more of what they want from their business.
So dad, husband, we own an insurance brokerage. We weren't busy enough. So, you know what? We'll take the triplets. We'll take the running a marriage and a household. Yep, that's fine.
Yeah.
You know what? We can handle more. Let's do the non-for-profit and another business too.
Yeah.
Okay.
Yeah. You know what it is? Honestly, it's really great people around us.
Yep.
Because that's how you do it. I mean, one of the best books that someone can read is Who, Not How.
Yep.
You spend so much time trying to figure out how you're going to do all this stuff. At the end of the day, there's great people who already know how to do.
Don't recreate the wheel.
Don't recreate the wheel. So we're very, very fortunate in our insurance agency. We have some of just the absolute best people in the entire world making that thing a success. On my EOS side of things, I have a strategic assistant called Fernanda. And Fernanda's absolutely phenomenal at what she does and saves my bacon so many times. And Kara has a phenomenal team over on the counter inside. So again, going back to that sports thing, you learn how to work as a team, right?
Well, and you heard it here first. For every guy that's doing something awesome, there's an even better woman holding them up there, right?
Yeah, absolutely.
So, yeah.
Absolutely.
Okay, so lived all over southwestern Ontario, fair to say?
Yeah.
So rural Chatham, Kent, London, Toronto. What made you want to buy property and move to Kingsville?
So we were living in London and we had just gotten out of school and we started looking around trying to find places to rent.
Yep.
And the rental market it was crazy there because you have so many students. We still needed to stay close.
Yeah, Western and Fanshawe.
Exactly.
Battling it out. Yep.
And we needed to stay close enough to Western because Kara needed to finish up her last year there. And we were looking around and then finally we're like, why don't we just buy a place? So we actually went back to the original area where Kara grew up in London.
Okay.
And we bought in the same condo complex that Kara lived in as a kid.
So super familiar.
Super familiar, which I think makes it so much easier to make that really big leap of faith to buy real estate.
You know what you're getting.
We know what we're getting, and we're very, very fortunate. The market had gone up during the time that we had owned it. Actually, we had one of our best friends living in the basement at that point in time. He was still going to school, which that ended up paying our rent or our mortgage for the most part.
Oh, cool. So they call that house hacking.
Yeah.
Right? Where you buy the house and you figure out how to get income from it. So even though it's your primary residence, figure out, okay, how do we make the payments?
Yeah.
Or how do we at least offset some of the ongoing operating costs of a household?
Well, because I was working at that point in time. Kara, at the very first part when we had bought it, she was still in school.
Yep.
So again, it's just no income.
You're getting paid really well.
Yeah. Yeah, exactly. And I had an hour-long commute out to St. Thomas at that point in time.
Okay.
So I'm burning money in gas. So having that rent from our friend, paying that mortgage was phenomenal. Then when we decided to move to Kingsville, luckily that market had gone up. And we went from a much higher priced market in London to a much lower priced market in Kingsville. So really capitalized on that.
Now that gap has shrunk. It's still there. But
that gap has substantially shrunk, really.
Yeah.
But there was also, I was the primary owner of the house. So you have to speak a little bit more to this, but I was the primary owner of that house. Kara wasn't on the title, but obviously we owned it together. And when we moved down here and bought our house, I was on title, but it was her first home. So we had some savings there as well.
Yep. So the way that it works is, like, for example, common law, the way I understand it is, let's say you already owned the home, and let's say that Kara moved in and you weren't married, then I believe after 6 months she'd get ownership essentially on paper of half of everything that you guys have built together. Now married, it's just automatic.
Yep.
And there's on our sheets when we actually sell the house, if the husband's selling it and the wife's name's not on title, there's actually a spousal consent line. But yeah, first time home buyers in Ontario, I believe the cap is $4,000 that they're exempt from paying land transfer tax the first time.
That's right. Yeah.
So if she had never been on title on a home anywhere in the world ever before, then 50% of your purchase would be eligible to her savings of the tax credit.
So that was phenomenal.
$2,000. Yeah.
So we made this move. We capitalized on that market difference, and then we moved down here, and we're living in a raised ranch with a 2-car garage with a backyard, and just as juxtaposition. In London, we're in a townhouse. It's a 3-story townhouse.
Yep. Like a row home.
Yeah. Communal backyard, kind of people looking at you from all angles.
Not a sun tanning backyard.
No, we're not, no garage. Yep. There's not even a carport. You just parked in front of the place. So what we got down here, our friends would come in. We were like 22 years old when we moved here. They're going, "Are you guys millionaires?"
Bougie.
Yeah. Yeah, bougie.
Got it made.
Exactly. So that was phenomenal. And we lived in that house. We absolutely loved that house for a number of years. And then we always said when we moved down here, we wanted to live on the water.
Yep.
That was the ultimate dream. I think it was around 2015 or 2016. So, 5-6 years after we moved here, we took a stab at a house along the water.
Yep.
It was a complete reno.
I say you guys did a ton of fixing up there, right?
We did. And I mean, kudos to my wife. She saw something there that I couldn't see. I walked in the door and I looked and I went, nope. And I closed the door and went to go walk back to the car. And she said, no. Just bear with me here.
Yep.
And we went back in and like everything needed to be redone. And it just needed a lot of work. And it had these gardens.
Did you guys have the triplets at the time?
No, we didn't.
Oh, okay.
Yeah. So we decided to do a full gut job on this. And there was 2 separate buildings. We decided to connect them. And we're so fortunate. Kara's dad is an architect.
Okay.
But he's an architect. And I only understand this now after several renovations. He's an architect that literally did the entire drawing of how our house was going to be.
Yep.
He also did the electrical layout. He also did the HVAC layout so that everything would look perfect.
Yep.
Because fast forward a number of renovations later and, owning another property and renovating that.
You don't plan where the ductwork's going to go. All of a sudden you got a bulkhead.
But that's not an architect's job, right? An architect's job is like, does it look beautiful? And like, how does it get put together? And then the HVAC person comes in and puts their stuff in. And then they maybe go back with the architect. And then the electrical person would come in.
Yep.
He did it all.
That's cool. So I bet you growing up around an architect, then she probably got some of that vision from seeing stuff that her dad's worked on over the years. And
as I say, like the unfortunate part is you're sitting here with me.
I'll call Kara next time. We'll just delete this
Kara
episode.
Who's the most talented person in our relationships, Kara.
Yeah.
Like she's got the creative side, she's got the business side, she's got the personable side. So I'm just
and the super mom.
She's the super mom. I'm just this sidekick. You're getting the second fiddle here.
Yeah. The Joe Biden being held up with a popsicle stick wherever he goes.
Exactly.
Okay, so that kind of brings, I guess, an interesting thing. Tom Story, who's a realtor from Toronto that we've had on this show in one of our first episodes, he always calls it climbing the property ladder. And so kind of seeing your story, start in London, little townhouse condo, subdivision raised ranch home here, that allowed you to get the fixer upper on the water. So like something we hear commonly right now in society, not just in the industry that I'm in, is my kids are never going to own a house.
Sure.
But I think a lot of the young people, and it's my generation, are going, well, look at what my parents have. That might have cost $200,000 when they bought it, but it's $850,000 now. So I'm never going to own a house.
Yeah.
But the reality is our parents typically didn't start in that home that we grew up in. Some did, but odds are they probably climbed the property ladder. Maybe the ladder had a few less rungs back then. Like, we just sold our 3rd or 4th house since we've been married. And like, we started a very, very humble cottage, and it wasn't like we were, making lots of money, because we definitely weren't. My wife was still in school when we got married and things like that. So we bought the crappy fixer upper that needed all the work, but hey, at least we had something. We figured it was pay rent or own something, pay the mortgage.
For sure.
And okay, we moved in a year and a half after that one to the next one, and then moved in 2 years from that one, and then lived there for 6 years and sold that one. And the whole thing was, I knew we just had to get on the ladder. I didn't know that properties were going to appreciate the way that they did, but I think the same thing can still be done now. It's just, you might have to save a little bit longer to make that first step onto the ladder. And you might have to be content with taking a little bit more time in between the steps up the ladder.
Yeah. And I wouldn't say I was some sort of a financial wizard, because there was nothing in my like long laid out plan of like, oh, I'm getting on the property ladder.
Yep.
I'm thankful we did. I mean, I could probably attribute it. My wife was probably, more of a force of like, hey, I think we should own than I was.
Yep.
So huge kudos to her. But I think that it's perception, right? And that condo that we lived in was simple. It was not very, very big. I mean, you were stairs to everything. Kitchen was super small. And we had to have somebody rent out the basement.
Yep.
And live in our space, because that basement there wasn't a shower and a washroom, so he was showering up in our shower. We didn't have an ensuite.
Fighting for bathroom time,
right?
Yep.
But there was no ensuite. It was one shower and one toilet, and then there was one other bathroom in the house. So I think you have to lower expectations on that first buy.
Yep. And sometimes even on the second one or the third one, like even you guys went to the water, but it was a disaster. You didn't even want to keep looking at the house, right?
Yeah. So I think it's what's the perfect world, and then what's the world that we can live in, right? Yep. It's trying to get that more clarity on, hey, what's the bigger play here at this point in time? And again, I'm saying this looking backwards. I by no means had this kind of foresight.
Yep.
I in a lot of ways, I call it dumb luck. Maybe my wife had a lot more of the foresight of, we need to get on this property ladder and get moving. She's always loved real estate.
Yep.
We're driving in the car, and I have a glance over, and she's scrolling through on Realtor.ca, and I'm going, don't we already have a house?
Yeah.
But if you're able to get in, it's great. You got to find a way to make it work. So you probably have to do something like have someone live in the house with you.
That's funny, because I asked you if you'd ever been a landlord before, and you're like, no, I haven't.
Yeah.
But really, you have.
I really have. Yeah.
It's just you had your buddy living in the basement.
Yeah.
But it was still rent, right? It was still coming in, and like Robert Kiyosaki, Rich Dad Poor Dad. So his thing is, your house isn't an asset because it only costs you money. It doesn't make you money.
For sure.
That's true until your house is making you money. If you have a tenant in the basement,
Yeah.
you put solar panels on the roof, or
Yeah, absolutely.
Yeah.
So it's been a great thing. It allowed us to get that house in Kingsville. It allowed us to then move on the water. And then we took a risk on doing the renovation, and we had a great guy, Mike Beetham, who did our entire renovation.
Yeah.
Again, we moved out during that period of time. Friends of ours owned a non-winterized cottage, and it was winter. And we lived in a non-winterized cottage with like a wood-burning stove in it.
Yep.
And we'd have to run to their place to like use the bathroom and everything in the morning.
Hilarious.
But you have to make sacrifices.
Yeah.
Life isn't perfect. And like, listen, were we annoyed at times? Absolutely.
But the memories looking back are pretty funny
Yeah.
too.
Everything looks so much rosier in the past, doesn't it?
Yeah. We bought our first house, and it was a full reno, no experiences. Didn't have it done. We go away for our honeymoon, come back, and we hadn't finished painting yet. Kitchen wasn't in. So like literally a couple 6-foot fold up tables. I had a Coca-Cola fridge on there, a coffee maker, and a toaster.
Yeah.
We're like, okay, well, I guess this is life until the kitchen goes in. And it's
Yeah.
like, well, looking back now, we laugh at it. Simple times, whatever. It creates funny stories and good memories that you look back on. And I think a lot of our society now, it's like, okay, well, HGTV, when they go to sell the house, everything's perfect.
Yeah.
But you don't see the 10 years they lived in. Like growing up, I mean, every home now, it seems like, has to have granite counters or quartz and new kitchen and everything. Growing up, it's like, nope, we have a house, we live in the house.
It was linoleum.
This year, we'll put in different carpets.
Right.
And we'll paint the kitchen next year.
Yeah.
And like we do one room at a time, and eventually we have this scale for what we want it to be. And now it's like, oh, I couldn't live in a house that has carpet. I couldn't live in a house with, blue paint or whatever. And it's like,
For sure.
well, you can. It's just we've accustomed ourselves to a certain.
Yeah. Which is, So everything's just perception, and it's just a matter of, I think you just have to switch your mindset. And we go back to, like, can people do it today? Listen, I'm not naive to the fact that house prices have risen at a rate that's probably faster than what the average household income is.
Much faster. Yep.
And I think at the point in time where we got in, there was this period of time where they had 0 down mortgages.
Okay.
That we got in on. So we had a 0 down mortgage, so we didn't actually have to throw any money down. So there was that was going on. But I'm going to tell you, man, I was making like $25,000 a year. In buying our first home. And I know like starting wages in new careers are a lot higher. But again, I understand that it hasn't risen to the point of inflation, but you may have to have 2 people renting your place. Find 2 buddies and live uncomfortably for a while.
Yep.
But if you're able to get on, that's absolutely fantastic.
Okay. So let's shift the conversation a little bit. So you own a insurance brokerage or insurance agency.
Yeah.
Is probably the right word for it. And you guys leased your commercial space for quite a while. And then a couple years ago, you bought an older bar.
Yeah.
And then renovated it into where you operate your business out of now. So can we talk about maybe what the differences were leasing a space for your business versus owning the space and essentially now being the landlord for your own business?
Sure. So when we first moved to town, I have a wealth of knowledge now in the benefits and the perils of leasing a space.
Being a commercial tenant.
And being a commercial tenant. And just to try to kind of create some vagueness around it, I'm not going to mention names or even kind of timelines, but some of the things that we definitely ran into was ownership changes.
Yep.
That was a bit of a peril. When you're renting from a great person and then they're going to tell you that they're going to sell or they end up selling and you get a different landlord in there. The peril of not having a lease contract. So, doing a handshake one day and then you actually get into the space and the price went way up more than you thought.
And commercial leases are very different. Like residential, or there's a ton of oversight. There's regulations in place. It cannot increase more than X percent per year that the government mandates and whatever.
But when you're on a handshake deal,
Wild West,
it's not good, right? Yeah. So a handshake deal and the price goes through the roof the next day. But I also will say that at the point in time that we bought that we're leasing in Kingsville for the commercial space, the agency was very, very small. And the price to rent was so reasonable. What it allowed us to do was to take the investable dollars that we would have been spending on owning a property.
Yep.
And
the
invest,
maintenance, the upkeep.
Yeah. And even just the mortgage. I mean, it allowed us to invest in our business. So we invested in people.
Yep.
And people allowed us to grow. So it's funny. There's always these points in time. I wish I would have bought a place earlier. But in retrospect, I think we got a place right at the right time.
Yep.
And it's funny. I think I heard this on one of your podcasts that, it's always the wrong time to buy, but then 10 years later, it was the right.
Yep.
It felt like the wrong time to buy when we bought it. It was in the middle of COVID.
Yep.
And I said, I wish you would have done it earlier, but we wouldn't have been able to have the people growth that we had. We would have had this asset that would have been growing.
So you would have sacrificed your business growth to obtain the property at that time.
To obtain the property at that point in time.
But then you maybe wouldn't have been able to make the payments and the improvements on the property.
Bingo.
Had your business not been sustainable and built up.
Yeah. So I think at the end of the day, everything happens for a reason. There's life just tends to direct you into the right place at the right time. We ended up picking up that property on Chestnut Street and did a complete reno on that.
And it looks beautiful. Like I remember being in that place when it was a late night bar and it was not the most beautiful place. Now you go by and it's all brick, new parking lot. Like it's beautiful. I haven't been on the inside, but curb appeal looks awesome. Yeah,
we love it there. And it allowed us enough room to grow. Because again, when you're renting spaces, you're renting for now.
Yep.
Or you're thinking maybe we'll have one more person. So when we built that space in Kingsville, we built it so that way it would be able to grow into. Yep. We have enough office spaces and things like that. And honestly, there's 2 parts that was a really cool moment. I remember sitting down with Kara because again, she was the driving force behind that.
The visionary.
We were looking. It's funny. I'm the visionary, but on that property side, she loves it. It's just a passion on her side. She had said we got to own a space. And I go, okay, it sounds good because I think at one point in time we went and looked at that medical building.
Okay. The new one?
The new one. And we were going to lease the space. It was going to be like $60,000 or $90,000 a year to lease that space. And we're going, we have got to be able to build for cheaper than this.
Yep.
And then we had looked at the old Annabelle's Tea House at one point in time.
Which is a big old 2-story
Big
house.
old 2-story.
Yep.
And I think we were just a bit scared over, hey, you can never get a feel for how much work's going to need to be done on an old building. And that's when, and we had flipped over to the one in Chestnut that was just more in our price range and things like that. But when it was all done, we just had so much pride that we had this place in downtown Kingsville.
Yep.
And I said to Kara, I was like, we own a house and we own a business in Kingsville.
Well, now you must be a billionaire if all your friends are looking at you.
Yeah,
right?
yeah, exactly.
You were super rich when you had that 2-car garage.
Yeah, exactly. So we're so happy, and it's cool because it's in the downtown area.
Yeah, walkable.
It's walkable to everything. And we really wanted to make it look good, not just for ourselves, but also for Kingsville.
Yeah.
Have it to be a nice place to look at in Kingsville.
And it's next to your gym, so the people are going to chirp you coming into the gym.
Yeah, exactly.
If you have a nice looking building.
And especially, if you didn't make the gym class.
Yeah.
So what are you doing?
Yell at you when you're getting out of your car going into work.
Yeah.
So we don't provide financial advice on this show, but one thing I'll say, this is a very well-known fact, so it's fine, is that as a business owner, you can write off 100% of your lease payments for the space that you operate out of. If you own that building, you can only write off the interest portion of the payment, which makes sense because the principal portion is going to your equity or the equity of the business. So my mom ran 2 locations of the same business for 35 years. And I was kind of always like, imagine if you had made mortgage payments instead of lease payments over those 35 years.
Sure.
But she had a landlord that didn't change her payment at the one location for 35 years.
Wow.
So she paid like $1,500 a month for forever. Or maybe I'm off on that number, or maybe he raised it like twice over the 3.5 decades. But the lease payment was so small, to your point. Okay, well, yeah, I could have owned a building, but my overhead would have been triple, and sure, I would have owned this asset at the end of it, but I also wouldn't have been able to write off as much as I was writing off. So I would have had more taxable income the government's going to take their cut of anyways.
Yeah.
So there's pros and cons. Now, the lease that she was in Windsor was like super high traffic, great commercial district. It's owned by a REIT now. And as you can imagine, when it's owned by a large corporation, whether they're privately traded or publicly traded, every single time that lease comes up for negotiation, it's going to increase.
Oh, yeah.
You want
absolutely.
this service, it's going to increase. Our taxes are going up every year because we're improving the building every year.
For sure.
So they were paying a 6-figure lease payment annually. And I'm like, man, if only half of that could have been into a mortgage payment, imagine what the business would have been worth on the out end of that ordeal.
For sure.
But looking back, it's always easy to go, well, okay, easier said than done, but we were renovating the business, buying new equipment, hiring more employees, things like that. Had we bought the building, we maybe would have been using old crappy stuff and it wouldn't have looked good inside because we were so focused on making the mortgage payment that we couldn't afford to build into the business.
Sure. I mean, it goes back to speaking to having a really great people in your life, right?
Yep.
Do you have somebody that you can reach out to help you with those calculations? Because I mean, I'm just a dumb guy with a coffee here speaking into a mic. There's far smarter people in the world that can help give that advice. Having a really great bookkeeper or a really great accountant or a really great financial planner to help, add a different lens to that decision-making process, right?
Oh, I'm big on mentors. There's a proverb that says a king doesn't go to war without wise counsel. And you might read it and go, okay, well, I'm not going to war, so no problem. But it can be applied to just about anything in life. Like I know when I was thinking of proposing to Paige, my wife, I ran it by 5 people that I believe wanted good things in my life for me.
Yeah.
And, hey, I'm thinking of doing this. What are your thoughts? We started thinking about having kids. Okay, thinking about having kids. Any advice? A lot of people got advice there. And when you do seek counsel from mentors, you have to qualify the mentor, right?
Yeah.
Are they a person that's actually going to give me an honest opinion?
Sure.
Or are they going to give me the easy thing to hear? Or are they not even going to hear me out completely and just reject it and say, that's stupid. You shouldn't buy the building. You shouldn't renovate the whole thing.
Yeah.
You shouldn't be hiring all these employees. Imagine your overhead. Mm-hmm. So you do have to qualify it. But yeah, having people you trust and respect and appreciate, bouncing those ideas off of them before you jump in and spend tons of money and time and blood and sweat and tears and whatever. If you can run that by a wise tribe first, then you might not have to make all the same mistakes they did.
Yeah, absolutely. And you just got to always be mindful of like, what are the hiccups that or the blocks that person's going to experience? I know that like I had a few mentors that were very adamantly against getting a commercial space.
Okay.
Maybe it's due to fear. Maybe it's something that happened in their prior world. I'm so lucky that my wife made the push for it.
Yeah.
And I'm so lucky that I did listen in the early years to like, okay, I'm not going to own. Like I said, everything always happens for a reason. You just have to, life will direct you, man.
Yeah.
Life will direct you.
And so if you look at banks, like banks typically own some real estate, but the majority of their locations are leased. Same thing like Starbucks. Starbucks has a model that works. They know how to run the business. I don't think they own almost any of their locations.
I didn't know that.
Yep. So typically they'll find a landlord with a good piece of land in the area. You need to build this building to our specs. They typically don't buy older buildings or lease older buildings, sorry. They want new ones built to their specs, and they negotiate a 20-year lease. And that's the same with a lot of chain franchise businesses. And because they go, look, we're not in the business of owning property. If we could take those same dollars that would have been invested in the initial build or the ongoing maintenance or whatever, we know what we can make with every dollar that we invest inside running a coffee shop like Starbucks or Tim Hortons or whatever. And the banks go, look, we make our money loaning money to the people that buy the buildings.
Yeah.
And then we just lease it from them and then write off the whole payment. So like they're obviously banks aren't stupid. They're the ones that loan us money to go buy the property.
For sure. You know what that reminds me a lot of is in EOS. when you're trying to build a really great business, we have this thing called the Vision Traction Organizer, the VTO. And that's to lay out the vision and the plan for your organization. And the second question of the VTO is, what's your core focus? And your core focus is what you're great at and what you absolutely love to do.
Okay. And I would imagine that if you stray away from that, okay, let's lay out the consequences.
Right. So Jim Collins in his book, Good to Great, he calls it the hedgehog concept, in that like a hedgehog knows how to do one thing. Like when it's going to get attacked, it curls up in a ball. Highly effective, always works. It can do it at a moment's notice, and that keeps it safe.
So it doesn't work on a more powerful bite. Just
right.
Roll into the ball.
So there's something in business of like when you're busy chasing shiny things or when you're busy trying to become everything to everybody, you lose what you're really, really great at. So, obviously Starbucks, phenomenal brand. They know what they're doing. They understand, hey, we're not property owners. We are a coffee business and we know how to run a coffee business. We don't want to have all the other things to be thinking about.
Also, we can project 2 decades out what our profitability and
Bingo.
growth is going to be each year. Maybe an HVAC system historically should last 2 decades. If this one goes at year 15,
right.
we have to replace that. Does that affect our profitability ratios and our future growth? Like, now is there capital that we can't invest into the business because it's going to replacing the HVAC unit? And a landlord, their business is owning property. They have to factor capital expenditures into it. And they probably have, if they own a ton of properties, especially a large commercial portfolio, they probably have people that go around and check these on an annual basis. So at least they can forecast, hey, we're going to need a roof here on this one in 3 years, HVAC here in 2. Okay, we better, factor that into our cash flow forecasting.
Yeah, did you ever read the book Onward?
No.
By Howard Schultz? So he used to be the CEO of Starbucks, right?
Yep.
And when he came in to take it over, they were into a million different things. I think they had I can't remember all the facets of business, but he did that. He got them laser focused on just doing the one thing. That's always stuck out to me, reading that book. And then when we went through EOS and we implemented EOS into our business, one of the things that we were involved in, we're an insurance company.
Yep.
But I used to be a financial planner.
And you were trying to marry the two.
Oh my gosh. I jammed a financial planning department inside of my insurance office.
Which is actually pretty common.
It's so common. But when you think about things, listen, financial planning is fantastic. But what we're really, really great at is protecting things.
Yep.
And what I was really great at, or at least in terms of what my passion was with financial planning, I loved sitting down with clients. I loved teaching them. I loved them helping understand their finances. I loved really delivering that value. But the scalability of that was very, very limited because the knowledge was in my head. That's
you
one
only
issue.
have so much time too, right?
And you only have so much time. anyways, it was really extracting a lot of the profits from the insurance agency to fund this passion project of mine, because it wasn't staying laser focused on what our core focus was. And as we implemented EOS, as I'm reading other books, like again, Onward, the more you hone down to what you're really, really great at, that's where like the magic started to happen. So now our insurance agency, we got rid of the financial planning side of it.
Interesting.
And we stay laser focused at protecting things and people.
Yep.
Very simple. Making sure that we're doing the right thing every single time. And if you do that inside your business, great things happen.
And so a lot of people think, well, if I can add this extra service into my repertoire, my clients will benefit more from it, but it could take away from what you do well. And that's why they came to you in the first place.
Absolutely. Yeah. You can't run around chasing shiny things all the time. Or if you're going to, set up another company to go do it.
Yeah. So side note, just talking about Starbucks, and you said the book was Onward, and that was Howard Scholl.
Yeah.
I was at a real estate conference in Ottawa earlier this year, and they had Magic Johnson there as a speaker. And I didn't know this, but Magic Johnson's like a huge real estate investor.
Really?
And so anyways, he like gave like basically he was the keynote speaker, which I didn't know he does speaking events too.
Yeah.
But he was hilarious. And he told us that he got the only ever non-corporate run license for Starbucks restaurants.
Really?
So most, basically all Starbucks are corporate owned and run. Unlike you own a franchise of the insurance agency that you're at. So it's independently owned and operated.
Yeah.
Starbucks are basically all corporate top down. And so somehow he talked with them and said, hey, look, I can get Starbucks to do well in these areas where you guys haven't done it, which is inner city. And he's like, I'm an inner city guy. This is the neighborhood I grew up, or like the type of neighborhood I grew up in, I guess.
Right.
And things like that. And he goes, I can make Starbucks relative here if you don't run it like every other Starbucks. So he got a license to run a whole bunch of inner city Starbucks around. And so he changed some of their menu items from baked goods that were not selling. They were a high cost and just flavors that typically he goes, my clientele aren't ordering these.
Right.
So we're switching to a peach cobbler instead of your cinnamon apple, whatever. And all of a sudden they started selling. And he's like, guess what? We don't need your uppity piano music or jazz or whatever. We need R&B in here.
Nice.
And so he started doing that, and all of a sudden his Starbucks started doing well. And I was like, kind of cool. Know who your audience is, right? Know your customer, know what they want, give them what they want, and they'll probably frequent more, and you'll be more profitable too.
Yeah, very cool.
Super weird side note, but I was like, I had no idea that Magic Johnson was like a huge business titan and actually owned a bunch of Starbucks.
Very cool. Very cool.
Yeah. Something before we started recording, you kind of touched on. It's an interesting thought, and I probably should have talked about this more in the past, but you said that landlords are business owners, but a lot of them don't operate owning property like a business.
Yeah.
They're just passive, and they just want to collect the check and whatever. So you comparatively had a business owner mindset or mentality landlord before, and then you had one who was more just, nope, this is a passive asset, whatever. Can you maybe speak to, I guess, that?
Yeah, so I'll just name the landlord because they were just so good. Nando and Kim Quadrini, local Kingsville residents.
I grew up in the same neighborhood as their son, so I know them very well.
Yeah, and they're just really, really great-hearted people. And when I worked with them, when I moved our agency over to their property, they ran that like a business. And what I mean by that is that when you're running something like a business, you're taking a vested interest in your client.
And so that's one key thing right there is they're not saying that, sure, you were a tenant, but they viewed you as a customer or a client, not necessarily just a tenant.
Yeah. So when I came in, I said, hey, listen, I got no money. I'm this agency's still new. I'm still trying to get this thing completely off the ground. For the build out, how can we work together? And Nando laid the floor in that himself. He put up all of the stud walls, and I don't think he ended up doing the drywall, but just the amount of work that he personally put into that to try to save me cost on build out.
That's so cool.
Was absolutely unbelievable. Owe those guys so much. But then the little things, every single year would come around Christmas and drop off a gift card. And listen, it was only $5. but he dropped it off to like each one of my team members.
And your team members ain't paying the lease. He doesn't have a contract with them.
But just so kind, and that gratitude and appreciation. Because, you know, I listen to like podcasts, I listen to investing podcasts, I listen to real estate podcasts, and it's all about the return.
Yep.
Right? And that's that mentality shift.
Or the lifestyle that it promises.
Right.
Yeah.
That mentality shift between this is an investment versus this is my business. He took a vested interest in my business because my business was his business.
That's cool.
And if he saw my success by like, hey, I'm going to put a little bit of time in here, but I know I'm going to get a rent payment out of this thing.
Yeah.
And I know
I'll
that,
keep these tenants longer.
Right. Yeah. And then juxtapose that with another property owner or a tenant, landlord that I had, who just said, hey, this is the rent. And we're changing the contract, and you know nothing's covered now. Listen, I remember where like an HVAC system kind of went haywire, and I called in. I'm like, I don't know what to do here. And I'm sure somewhere written in the lease agreement it was my issue, but he just came out, and like went and looked at it, and then said, "Do you want to go split these on it?" I'm going, "Yeah, sure." It wasn't a major cost.
Typically, just as a person who now has a very active interest in commercial tenant and landlord. Those things typically the replacement of them would be a landlord thing. The ongoing maintenance is a tenant thing.
Right.
So it's my asset. You take care of it. If it needs to be replaced, then I'll replace it.
Right.
So that's pretty cool that he's like, yeah, I'll help you out.
He was so awesome. And anyways, I honestly just can't say enough good about those guys because all of the success that we've experienced with Murray Insurance has been because of people.
Yep.
And like just luck of running into great people and having people buy into the idea that we had and people coming on board and being clients of ours, or like just the luck of meeting a really, really great person to lay the floor in my place. Because I'm useless. I don't have a handy bone in my body. So
yeah,
so, my poor wife.
Expert delegator.
Yeah, exactly.
I can relate with that. Okay, so we're talking mostly real estate here. You are in the insurance industry. Mm-hmm. It's maybe a lot of people don't find insurance really exciting or
it's not sexy. We're not bringing sexy back.
Yeah. However, necessary evil.
Yeah.
Maybe some people would call it that.
Yeah.
No, I do believe that what you guys do is it. I can tell by the way that you're talking. There you go. No, we protect people. We don't just make money on annual renewals. We do believe that they have an asset that they need protection for. And by the way, the bank requires it if you have a mortgage on it. So if you're going to need it, you might as well get the best product. What are some things as a property owner that maybe I should know about insurance that could save me money? And like, there's probably the discussion of, I want the cheapest policy and the lowest deductible.
Yeah.
Okay, but is that actually going to benefit you? Like in Kingsville, August 2023, you said probably worst month of your life in insurance.
It was terrible.
So for anybody who doesn't know, we had like an insane amount of rain. And I don't think it would be a stretch to say that 1 in 6 to 7 homes had wet basements.
Yeah. We had 130 claims roll in one day.
Wow.
That's
a very small town.
That's insanity.
Yeah.
I mean, so let's kind of, that's a really great question. What's some kind of tips and tricks and some advice on the insurance end of things?
Yeah.
Get your pen and paper ready.
Yeah.
So first and foremost, what everyone needs to understand about a home insurance policy. Home insurance policies have very little governance on them when it comes down to the Ontario government.
Okay.
There's some bare minimums that have to be in there. Those bare minimums are very, very minimum. It is the Wild West of insurance.
Yeah.
So as you're shopping around to try to save money on your auto insurance, let's talk specifically there, is people walk in with their deck page. So the deck page is that, hey, my house is insured for $800,000. I got this much for contents. I have this much for additional living expenses. I got this much for my deductible. I have sewer backup coverage on there. Things like that, right? The very basics. And what we find is that most people walk in and they go, there's my page. Give me a comparable quote. None of that matters.
Okay.
Nothing on that front page matters. Whether that number said 800,000 or it said $25 million, it doesn't matter.
But the consumer is more actually looking at monthly payment.
Yeah, and I'm talking about like the coverage amount, because people will come in and they're like, just mimic these exact same coverages. We have no idea what those coverages mean, because what the coverage is dictated in the policy wordings. So policy wordings is this enormous document that you get.
Say 200 pages that follows.
Yeah. And it's going to go through, okay, hey, what is covered? And then it's going to go through what's not covered. So the very first thing that everyone needs to realize is that the price is directly reflective, not so much on what's listed on that deck page, but what's listed on the deep end of that policy.
Okay.
Because again, if I could put let's say your house is worth $800,000, I could list it for $25 million on the policy. But if I have exclusions that's going to exclude every single possible way that you could make a claim, it's useless to you.
Yep.
So you got to really compare those policy wordings, which can be really difficult at times. And I think this is one of the biggest issues this is the biggest issue in financial planning. This is the biggest issue in banking. This is the biggest issue in so many areas, in that this big push to online, where, you're going to go find your insurance coverage or your investment planning or whatever it happens to be online.
Yep.
Is that it's taking the advice away from people.
Yep.
And people don't know you don't have an insurance license. So that's the very first thing.
Or that you fully understand, like, there's something to be said about local too, right? Like, we all get those insurance flyers. It might be one company from Ottawa, click here for an instant quote.
Yeah.
And it's like, have you dealt with the Essex Region Conservation Authority before?
Right.
Because guess what? Like, you're telling me I can get a quick quote, but if you're familiar with the east side of Leamington, which sometimes has this overland water if we have high wind and lots of rain, like, is my property going to be affected by that? So local knowledge could mean
absolutely. I mean, as we start insuring houses along the water, we try to increase the building ordinance law, because at the end of the day, if that place burns down, there's probably some other building ordinance law changes that have occurred that we're going to have to make adjustments. These are things that people outside of the area don't know.
Yeah.
But again, it's all buried in those policy wordings, right?
Yeah.
So
and you want to hope that it's never going to happen to you, but like close to your home, 2 houses burnt down, like your neighbors 4 doors down 2-3 years ago.
Yeah.
Like it does happen. We don't want it to, but it does. And when it does, you're not going to hope that you had the cheapest policy possible.
100%. So, and then another thing that tends to come up is that it'll say like your house insured $800,000, say guaranteed replacement cost.
Yeah.
Well, that's all fine and dandy, but again, we need to go back into the policy wordings of what is guaranteed replacement cost, because it doesn't guarantee that no matter what the price of that house is, that it's going to get replaced.
Yeah.
Oftentimes, it'll put like up to 20% more.
Okay.
Of whatever it's listed for. This is where all of the evils are found in the policy wordings, and that's where you really want to be careful. And then you move farther down that sheet and you look at things like sewer backup coverage. Water coming into your home can come in multiple different ways.
Plumbing leak,
right.
Sump pump failure,
right.
Actual flood,
right,
where it could come through a window.
Yeah.
It could
cracks in the foundation.
Yeah.
It can come in so many different ways. Well, guess what? How it comes in is going to be listed in the policy wordings and determines whether it's actually going to be paid out or not.
Yeah.
So sewer backup can mean a number of different things. Does that cover if it comes in through cracks in the foundation? Does that cover if it comes in through the window wells? What happens if you have a pond in the backyard and that pond overflows and that actually ends up in your house? All of these
leaks and
pool leaks. These are all different ways. And again, the evils found in those policy wordings. You got to talk to somebody.
Yep.
I am baffled that you can even try to do this online, because at the end of the day, there are so many facets to it. And then the other thing that I always want to talk to people about is that if it costs a lot of money, there's a higher chance of the claim. So I want to really drill that. I'm going to say it again. If it costs more money, the chance of loss is higher, or the magnitude of the loss is higher.
Which makes total sense. Like, we're a real estate podcast here. Okay, well, if I can't get my credit file approved at TD Bank, I'm going to go to a broker, or maybe I even applied to TD through a broker, but I'm going to go to a broker and they're going to say, okay, you don't qualify as an A lender. So we can send you to the B markets, and if you don't qualify there, private lending.
Right.
And it's the same thing.
It's the magnitude of loss,
Well,
the risk.
You know, maybe the mortgage was going to be 5% at one of the big banks, which I don't qualify for. So they view me as a riskier house that's more likely to flood. Essentially, you're a guy that's probably not going to pay back his loan. So you go to the B market, okay, maybe 1 or 2% more.
Right.
Yeah, you don't qualify for that. Well, now you're paying 12, 14, 16%. Okay, well, they know that I'm more likely to not repay the loan if I don't meet their qualifications.
Right.
So there are people that are willing to finance me, but they need a higher return to offset that risk. And same thing in insurance from the
Same
sounds
thing in
of it.
insurance. So what you want to look at is when you're looking at like that policy and you see like a coverage and you see the amount of money. I often joke around and say, I could put giant monster insurance on your insurance policy. If you go back to the old SNL skit of, what was it? Old Dominion insurance lending.
I don't think I know
Giant
that one.
monster
I'll have to
insurance.
watch it.
But what I'm saying is that the chance of a giant monster destroying your house is zero, right?
Yeah.
Because it's not going to exist. But I could put $25 million worth of giant monster insurance destroying your house.
Yeah.
But the cost is probably going to be a penny. So if you're looking at your insurance policy and the cost is super low, the chance of loss is also probably pretty low.
Can't you put hole-in-one insurance on your homeowner's policy?
Like where it's kind of all under one blanket?
No, hole-in-one. Like
Hole-in-one insurance.
golfing and I
definitely
had
know
a
you can get
hole-in-one.
those on commercial policies.
Okay.
But yeah, not so much on your personal policies.
Okay, so maybe it's just a tail
to buy the round at the end.
Yeah.
But at the end of the day, you want to be placing your premium dollars on things that have a high magnitude of loss that are going to really, really affect you. And if you're looking on your insurance policy and the cost of that particular coverage isn't very high, it's probably the probability or the magnitude of the loss is fairly low.
Yep.
So with that also is when you're looking at your insurance premiums in general and where you're spending your money, is you want to be focusing your insurance premium dollars on things that are of a high magnitude of loss and probably a lower likely of happening. So hear me out on this.
Sure.
Cell phone dropping and smashing. Frequency, pretty high for people, right?
Yeah, a couple times a year maybe.
Magnitude of loss,
$1,500 max.
it's fairly low, right?
Yeah.
So when you're putting your insurance premium dollars on insuring that phone that has a high frequency of loss, but it's not going to be a major expense out of your pocket.
Devastating.
It's not worth your premium dollars. Okay. Every single time you're looking at something, you got to go magnitude of loss versus frequency of happening. Now, your house burning down, frequency of that happening lower, but man, the magnitude of that loss, enormous.
Yeah, so it's not going to cost you a ton of money for the fire insurance, but if and when, you're going to be thankful.
Bingo. So then this extrapolates out is that where we spend a lot of our time is educating our clients on the importance of life insurance and disability insurance, because at the end of the day, the only way you make your insurance premium payments, the only way that you make your mortgage payments is because you work.
And you're alive.
Right?
To the life insurance.
Because you work.
Yeah.
So if we lose you, we lose your paycheck. Your paycheck is the most important thing in that household financially.
And then if you can't pay your insurance, your company that's financing your mortgage is going to send off a notice saying you can't have that house.
Right.
It has to be insured.
So if you're insurance professional, because again, insurance professionals, you're supposed to be protecting things and people.
Yep.
If they're not talking about that, that's a massive issue, because if you can't make your insurance premium payments or your mortgage payments or getting your kids to hockey because you no longer exist, which means your paycheck doesn't exist, that's so immense.
Yep.
We talk about frequency, severity. Severity of that is a 10 and a 10.
Yep.
That's where you got to put your premium dollars when you're spending on risk management.
Yep. So I'm a big Dave Ramsey guy. I love the Financial Peace University and a lot of the books that he's written and things like that. And so some people might not agree with the whole process, and I disagree with minor things that he says here and there. And maybe it's because we're Canadian, he's American, so there's some slight differences and whatever. But one thing he always stresses to people is even when you're in that step one, going through the debt snowball, trying to pay off all of your debts before you start rearranging the rest of your financial, spend the money on a will and make sure that you have life insurance.
Yeah, 100%.
Because you're trying to get those debts done. And so you would think, well, maybe it's going to cost me $250, $500 to have a will done. Why wouldn't I take that money and put it towards my debt right now? Because that's something, I'll be out of debt sooner. Sure, as long as you're alive.
Yeah.
That's great. But if you do die, well, then what's going to happen with everything else now? So he'll go, even though you're in that stage where you're trying to pay off your debts, still make sure that you have life insurance and that you have a will. And if you've never had them, go get them right now.
Yeah, I couldn't agree more. We often have Sebastian, obviously local lawyer in town, Sebastian, Amy Lynn. They're just absolutely phenomenal.
Yeah.
We'll have them come in to talk to our team about that, because as we are talking to people, that's an additional thing we're always talking about is, hey, do you have a will?
Yeah. You just bought life insurance from us, but do you have a will?
Right. Yeah. I mean, people spend so much time thinking about the growth side of things. There's this thing in financial planning, they call it the financial planning pyramid.
Okay.
And the base of your pyramid is protection, because you actually can't grow before you start protecting. Because in the event that you pass away or become disabled or something happens, you can't grow.
Well, okay, so I think of waterfront property. So you're talking about, okay, I live on a home on the water. That's great. If I didn't have any shoreline protection, that house might not be.
Right.
So yeah, I could build my house up and up and up.
Right.
If I have no shoreline protection, the waves are going to pound away at the dirt, take it all away, and eventually the house is going to be in the water.
You got to protect before you grow, man.
Yeah.
So that's another major piece of advice I give. Like, look over those policy wordings. Again, just contact a professional. And if they're not going to go through those policy wordings with you, find someone who will. Protect the things that are going to have the highest magnitude of loss.
Yep.
And then when we're talking about in the local area, you got to be very concerned about weather and water.
Yep.
Listen, we live in Essex County. It's flat.
Yep. There's water on three sides of it.
There's water everywhere. It's flat land. It's old sewer systems. And we have very, very active weather.
Yep.
So at the end of the day, losses occur.
Yep.
So let's walk through that. I mean, if you want to save money on your insurance, very first thing is your deductible. How much are you willing to take on that loss before the insurance company is going to kick in?
Yep. And usually the higher the deductible,
The lower the price.
Yep.
Right. So let's increase that deductible a little bit. So let's do proper financial planning. Let's create a savings account, an emergency account to be able that we could use to pull from. So that way, in the event of a loss, we could pay the deductible. The second thing is, let's look at things around the house that you can do to prevent losses. So if you have a basement, you should be storing your stuff in containers, keeping them up off the ground. You should be looking at your sump pump.
Clean
Is
your
it
eaves
working?
troughs every fall.
Clean your eaves troughs every fall. Look for ways that is going to help prevent the losses, so that way you don't have to use your insurance coverage. That way you don't have to pay out your deductible.
Yeah. Backflow valves, generators,
Bingo.
sump backups, and all these things, like, because they seem to be happening more and more frequent. Maybe it's not, but it seems like it is.
No, they're happening at an exponential rate. And Cody, the issue now is that the cost of these things. Listen, I had in 2011 or 2012, somewhere in that area, I had a basement flood.
Yep.
And we had a fairly large. It was one of those ones. It was on Hazel. It was a ranch style house. The whole basement was finished. Flood. And I looked up between the emergency work and the rebuild. I think it was $11,000. That claim. I'm going to tell you right now, we had those major losses that happened in August of last year with all the water. The emergency work is coming in at 10
before you actually fix anything. So just the people to show up and to strip the basement.
So what the point I'm trying to get across, it costs so much money now. The inflation that has occurred due to, increase in the cost of labor, increase the cost of materials, increase in the cost of just doing business.
Less capable people of doing handiwork.
Right.
Yeah.
Like that cost has trickled into the insurance side of things. You got to make sure you're updating your policy that if you only have $15,000, $20,000 in sewer backup coverage, you got to up that price, or you got to really make sure if you're going to mitigate your own losses, then you got to get everything up off the ground. You probably don't want to have, you want to have like the peel and stick flooring, not carpet down there. You definitely don't want laminate down there.
Yep.
Yeah. I mean, you have to take personal responsibility on that stuff.
Well, and something I'd say too, like one time we had a house for sale and they did a septic inspection, and it turned out that the septic system needed to be replaced. And so the seller was devastated that his sale fell through, and okay, I got to replace the septic system. And he goes, well, am I going to get my money back from it? And I said, well, you should, because now any potential purchaser looks at it, goes, look, I got a brand new septic system. I don't have to worry about this thing. And so generator, backup sump pump, backflow valve, like sometimes I know in the city of Windsor, they were actually giving you 80 to 100% of the money to put in a sump pump if you never had one.
Right.
They would cover stupid things. Like they wanted less homes putting their water into the storm sewer. So they would actually pay for you to extend your downspout away from the house on the lawn, not into. So the government, depending on the city that you're in or township, sometimes they actually have, hey, we'll give you the money to do that.
Sure.
So like I owned a house in Windsor and I was like, if they're going to pay for a sump pump, I'll put in a sump pump. Now when I sell the house, it's like, oh, that house has a sump pump. The one beside it doesn't. Check mark on the one that Cody's selling.
For sure.
It has a feature that this one doesn't. They're not crazy expensive. It will give you a lot less likelihood of your basement flooding or running into a disaster like that. So yeah, you don't want to look at it as money out the window. Okay, maybe I don't need as expensive of an insurance policy if I have that backflow valve. If I don't have one, the likelihood of my basement filling up with sewage is a lot greater.
For sure.
So, okay, put it in, and whoever buys it from you in the future, yeah, they're going to be respectful and thankful. Great, it has it, and it's probably a feature that they'll be willing to pay for too.
And another misnomer, because you brought up septic systems, is that we often hear this. Somebody calls up like, oh, I don't need sewer backup coverage. I'm on septic. Because the word sewer is in that word. Septic systems can back up too.
Yep.
I almost had ours back up. We had it pumped 11 months ago. And I flushed the toilet the other morning, and all of a sudden I heard all of the toilets gurgling.
Yep.
Well, unfortunately, I think some of our kids had put some, it was Kleenex over the last 11 months, or just stuff that shouldn't have gone into that septic system.
Any of those wipes do not flush.
Right, yeah, and it was completely full. It had the potential of backing up into our house. Just because you have a septic doesn't mean you don't need sewer backup.
Yeah.
It's the way it enters your house, which again goes back to the policy wordings, these goofy little things we put on that front page.
Yeah.
They don't matter.
I have a really funny septic story system. So I had a client with a conditional offer accepted on a home, and it was conditional on a septic inspection. And so anyways, I got to chatting with the guy that was there pumping the tank out. And I'm like, okay, so, what are we supposed to say every morning when we see you? How's your day going? Well, crappy. Or like, so I'm like, okay, so you got all these jokes, you hear them every day. I'm like,
yeah.
Any good stories? He's like, oh, I got one for you. He goes, one time this guy calls me over to his house to, it's not flushing, right? Whatever. Don't know what's going on. And, anyways, so the guy goes inside the house after he emptied the tank out, and he flushes the toilet a couple times, and all of a sudden a big splash of everything comes out, and there was condoms in the thing.
No.
And he goes, sir, you can't flush condoms down the toilet.
Yeah.
And he goes, well, I'm fixed. And the septic guy's like, do you have any kids that are adult age? Nope. He's like, I'm sorry, man. We'll send the invoice in the mail. And I think that's how he found out about his wife's affair.
Oh, no. Septic stories.
Yeah.
Yeah, they tell all.
Yeah. Anyways, not to go too far off track, but I thought it's sad, but it was funny too. Okay. We're in Essex County. I call it the Florida of Canada, because we're like a little peninsula out in the lake. We're also the most southern part. I'm just hearing about absolute disaster stories with the insurance industry in Florida. And I don't expect you to be like, yeah, this is exactly how it works, because it's totally outside of your area. But there's a lot of real estate investors from Canada heading south right now. Yep. And naturally, they look at Florida because the short-term rental market's on fire.
Sure.
Florida's a place a lot of people want to be. No state income tax.
Yep.
Anyways, there's a lot of things that look great down in Florida, especially the weather. But they also have a ton of natural disasters. And so I have a friend, and he has a house in Florida. And I think he told me that something between his original policy 2 years ago and then his renewal at 1 year.
Sure.
I think I heard someone say 60% increase, and I heard someone say 200 or 300% increase. Probably depending on the part of Florida that you're in and how many claims they had based on the last hurricane, or I don't even know. Can you insure against hurricanes and earthquakes? And is it acts of God, they call it, in insurance underwriting?
No. So again, this all goes back to the devil's in the details, right? In those policy wordings. Let's talk a little bit about Florida, though. So Florida obviously has a lot of active weather systems, right? So when we talk about magnitude of loss, when a hurricane comes through, it's a huge magnitude of loss.
Massive.
Billions of dollars of property damage, right?
Yep. And frequency is
going up as well.
Yep.
So when you're looking at an insurance business, that when frequency is getting higher and severity is going through the roof, because again, they're having the same issues. The cost of getting that place cleaned up has gone up substantially. It's gone up way faster than inflation.
Yeah.
Unfortunately, what happens is insurance companies then start to say, it's too much risk for us. So the other thing too is with insurance companies, I mean, at least here in Ontario, because I can't speak to how specifically Florida is, we have to have X amount in reserves to be able to cover the losses.
Yeah.
So if you're unable to collect the correct amount of premium to offset the losses
and save it,
and
it's got to be liquid to some point too,
right?
Right?
Absolutely. Then they can't continue business. So I know that State Farm, I believe at one point in time had pulled out, or at least in terms of writing new policies, has pulled out.
Yeah. So it's either increased to the point where it's covering the losses and putting some in the bank, or we don't insure that part of Florida or Florida at all.
Right. And that's what you're seeing in Florida happen. That's becoming a major risk because again, frequency and severity are going through the roof. They can't incur the losses there.
Yeah.
When we kind of bring that back to Essex County and just the active weather, listen, gone are the days, and I will say this, gone are the days where you're going to see your insurance policy go down.
Yep.
I just don't believe you are ever going to see your insurance premium saying, I didn't make claims, et cetera, et cetera.
Here you go. Pay less money.
Pay less money.
Yeah.
Gone are those days. Gone are those days for a number of different reasons. We are getting way more active weather. Like the number of storms that we have rolling through here, the severity of those storms that are rolling through, the cost of those claims are through the roof.
So the cost especially, like
right.
It's not just inflation was 2.5%. So the cost of redoing a basement went up 5%.
Right.
It could be 30-40% year over year, depending on what materials.
That same loss would have been at our property would have been 30,000. That was 10,000 or 11,000, back in 2011 or 2012. So it's gone. It's not happening. Now, will your insurance premiums increase as much as the person who made the claim? No. They're not going to increase as much. But at the end of the day, when your Tim Hortons coffee is going up, so is everything else.
Yep.
And we are not immune to the inflationary increases either. And unfortunately, I think that there's just a bit of a misnomer in the insurance world that I don't make claims, therefore my price is going to go down. No. You don't make claims, therefore your price won't go up nearly as much as the guy who was making the claims.
Yep. That makes sense. Okay, well, that covers most of the questions that I had for you. I guess floor is yours. If there's anything that you want to leave the audience with, knowing that the people listening actively interested in real estate, whether that's sales, ownership, leasing, whatever, and you're in insurance, anything you want to leave the audience with?
Yeah, I mean, going back is that focus on getting the right coverage. And the right coverage, again, is going back to those policy wordings, making sure that it's insured the correct way, the way that you see the risks. And if you're going to go for the cheapest one, then you're probably not going to have the payout that you think that you're going to be getting.
Okay.
The other thing, too, is as you are investing, because it's a real estate kind of investing show, everything real estate, protect. So and this protection comes in a million different ways. But one of the ways that I do see is that you have these people who want to accumulate their wealth and pass it down to their kids.
Yep.
Right?
Generational wealth.
Create generational wealth. You got like 6 rental properties, 10 rental properties, whatever it is, even 1 rental property. You want to pass it on to the kids. One of the biggest things that people don't understand is that we have, and I'm not saying our taxes are right, but we have a very well run tax system.
Sure.
Meaning that the loopholes are far less than what the politicians would allow or would make you think.
Yep.
They always want to try to shine the light somewhere else. It's
pretty
actually
airtight.
It's an airtight system. It's actually phenomenally well built. Not saying the correct amount, but
sure. Yep.
It's phenomenally well built. So with that is you have a rental property and you want to get that to your kids. You got to pay tax on that to get it to them.
Yep.
Right? There's no way around it. You want to give it to them now, you got to pay the tax now. You give it to them, or you want to give it to them at death, it's going to be the same way. If it's inside of a corporation, it's the same. There is no way around it.
Yeah.
So when we talk about you got to protect it before you build, you got to figure out if you want to create generational wealth, that what is going to pay that tax bill.
Yeah.
You either need to fork money into an account and save for that tax bill, which again, there could be some tax on the accumulation of that account.
Yep.
Or you need to be okay with, hey, I got 6 rental properties, 2 of which have got to be sold to pay the tax bill on the rest of these things, which again, you've done a great job of building wealth for your children, and now you're giving some away. Or you get a life insurance policy to pay for that thing. And I'm going to tell you, if the tax bill is $25,000 or $100,000, you get a life insurance policy, you are going to pay less.
Yep.
In that amount of money,
because there's no tax on when the benefit of the life insurance policy is recognized, right?
But at the end of the day, you're gonna pay that thing for, let's say, 10, 20 years, and then hopefully you built the life insurance policy so that way it continues on forever. It's going to continue to keep growing in value to keep pace with the inflation increase of that tax bill.
Yep.
And you're not going to have paid the entire amount of tax that you would have had to pay later on. It's going to take care of it.
Yep.
And it's a phenomenal way to do it. But whether you're going to do it between selling it, having cash on hand, or the life insurance, you got to plan for that. And the same goes for like your cottage, anything outside your principal residence.
Yep.
So that's kind of my advice. Protect before you grow, and make sure that you read through the policies or find someone who you trust to be able to look at those policies for you.
Awesome. Well, ladies and gentlemen, Ian Murray. Ian, thanks for being on the show.
Thanks so much, eh?
Thanks for listening to the show, folks. Please keep in mind that this show is not offering legal, financial, or accounting advice, but rather opinions and experiences in the world of real estate from the host and the guests. If you're enjoying the show, please rate, review, and share with your friends and colleagues. And if you think that there's someone that needs to be on this show, please feel free to connect them with me. Or if there's a topic that should be discussed, feel free to let me know. Thank you so much, and bye for now.